Good day, traders. Today we'll be talking more about market structure and chart patterns. As a price action trader, we actually have a lot of technical aspects that helps us to know when to buy and when to sell. So you know that we always say that market structure is the key, and the use of trend lines within our charting software help us to frame our range, the range in which we are going to trade. Like, if you understand what is happening on the chart, it will be easier for you to interpret how and when to sell or buy. So today we have so many ways and so many things and so many tools that we use to identify our structure and to know where we are in the market. Like, we've already talked about supply and demand, which you all know. I've sent a video to you guys. The supply part and the demand part. So remember what we say. We said that the supply is the last candle before an impulse move down. And demand is the last candle before an impulse move up. And we also talk about support and resistance. And I've already told you guys that if you want to get a strong support and resistance, as you can see here, you can change your chart to line charts. Then you start marking it out, and once you start marking it out, it will be clear for you to see that each of the lines, that price bounce either up or down from those lines. So it's very easy, and because we have been practicing with line charts, because as a beginner, if you start learning about your trend lines and your horizontal lines and the use of your arrows with a line chart, it shows that the market close of, as in you are using the body close of the market. So plotting your chart patterns is a lot easier when you plot it on a line chart, although the wicks are very important, especially on the higher time frame. I repeat, the wicks of every candlestick tells a story on a lower time frame. The wick on a higher time frame tells a story on the lower time frame. So today we are going to dive into different types of chart patterns that we have. So I'm going to show us so many ways or pattern on how we draw our chart patterns. Our chart patterns is no other thing like double top, double bottom. We have the one like maybe our triangle pattern, and these patterns represent structure and is a very component strategy. It's a strategy on its own. We have the reversal pattern, we have a reversal chart pattern, the ones that once you see it on your chart, and it always repeats itself. Once you see it on your chart, it denotes a reversal. And we have a continuation pattern. And in our next video, we are going to take it one by one. In fact, I will do few of reversal pattern, then I will do few of continuation patterns, so that it will be clear. It will be clear to us. So, and these patterns are very perfect anywhere. anywhere on any time frame. You can use any time frame to plot your chart patterns. And as you're plotting your chart patterns, you see that forex trading is interesting and is an article work. Even if you're not an artist, you can get this and you start enjoying it because it's very, very simple. It's very, very simple to plot on our chart. So let's dive into how we pick our trend line. Remember what I told you, just get the overall trend on your monthly time frame. You have getting your objective on your monthly time frame. Then you come down to your daily and see if you can get a chart pattern. Okay, assuming now this is still Euro USD that we are using. Always get the peak points. The peak points. This is what we call chart patterns. As I'm drawing it now, it will look like a channel. To look like a channel, and you can get this chart pattern inside another chart, a bigger chart pattern. You can still get another chart pattern inside a bigger chart pattern, and they have names. So this is the way we draw the chart patterns. So all these that I'm drawing now is what I call chart pattern, and make sure it's touching the peak points, the swing points. All this, like this one, is a descending channel. This descending channel, it denotes a reversal, and as you can see the way it's moved. Price was moving down. As it was moving down, it break this channel. And remember, I told you that if you plot a chart pattern, the part that is touching the base is the support, and the part that is touching the tip is resistance. Assuming this part is not there and you saw this particular area breaking out, that's when you will start looking for your buying opportunity. And as you're looking for your buying opportunity, we have so many confluences that we add to make this a perfect work. So this is what we mean by chart pattern. This is a descending channel, and even if I delete this particular one, you see that price is moving around this trend line. It's still moving around this trend line, forming high, low, high, low, high, low, and as it's forming a high and low until it's either it breaks. If it breaks this high and forms another low and did not break this particular trend line, that means price is still going up. This is what we call breakout strategy. So what we do is, as a trader, we either trade continuation. There are chart pattern that denote continuation, and there are chart pattern that denotes reversal. So when, assuming maybe you come back next week and you see price breaking this trend line, once it starts breaking this trend line, that's when you see that you know that price has reversed. We call it reversed. So now we still have a high that has not been broken here. And this high that have not been broken here, remember, is still a supply zone. When you change it to line normal candlestick, you will see that there's a last candle here, a last candle before the push down. This particular push down here, you see that there's a candle before this push down. So price can actually tap here and push down without breaking this high. So that's why I say on a higher time frame, you can frame your work. Can still frame your work. Yeah, this is the body close and this is the wick, the swing point. So once you see this place breaking, that means there's a breakout. And when there's a breakout, it becomes a strategy on its own. So remember I told you that market moves from supply to demand, from demand to supply. So we'll still be looking into different types of chart patterns that we have. We have ascending charts, ascending channel. We have descending channel for a reversal pattern. Those are reversal pattern. We have a rising wedge, we have a falling wedge, we have head and shoulder, pattern. So we talk about them in the next video. So please do have a wonderful day, because this is just an introduction on what we are going to see, and I want every one of us to start practicing it. Start plotting the ones I drop in the class. There are some chart patterns I dropped in the class. Go to your daily time frame, your 4 hour time frame. The more you practice and you look at your chart, the more you see where you were. When you plot a chart pattern on your chart, don't delete it. Allow price to move either in between or it breaks. Then you denote it, note it down, write down what happened. That is the only way to learn forex trading. Forex is hard for those that don't want to research and read. If you read and you research, you see that you start getting used to it. So please do have a nice day, and like and subscribe. Thank you. Bye.